Check in with the management of Naveen Steel Strips Wheels. Naveen Sorot, the CFO, joining us here post the earnings. The stock has been in focus. Let's bring up the intraday chart for you. Hi Naveen, thanks for joining us here on ET now. It's been a strong quarter for most auto ancillary players given the high demand across the board. What would you say has been responsible for the kind of bottom line that you have reported, and stock today not seeming very enthused?
Yeah, hi, good afternoon. As you have rightly pointed out, I guess FY18 has been a good year for us, both in terms of the growth that we saw in the top line as well as bottom line. I guess there were a couple of factors which contributed to this. One was the optimum utilization of the facilities that we have created. I guess the utilization levels in last 4 or 5 odd years have moved up from 67 odd percent to 80 odd percent. And second is, I guess last year was among the very few years which saw growth across all the segments that we are catering to. So be it two-wheeler, three-wheeler, truck, tractor, OTR. I guess a significant growth that we saw across the CV segment, which grew for us by around 26%, and tractor which grew by around 15 odd percent for last year.
You're covering his designation. But in the last 2 months, you've seen record sales in the truck and tractor segments. Do you believe such kind of high growth is sustainable? I know we are talking about a monsoon. It's already arriving in Kerala. Bombay is going to be seeing it over the next few days. So do you think this kind of growth is sustainable?
Looks sustainable. I guess there is the kind of order book that we have received for the current year. I guess the number looks good. In fact, we are expecting this top line to grow by another 25 to 30 odd percent in FY19.
Right. As you said, the top line will grow. What sort of capacity do you have? Do you have sufficient capacity to fund growth for next couple of years?
Yeah, I guess there are two new capex that we did in last 2 years. One was the CV line that we put up in our existing plant in Chennai. That got commissioned in February 2018. And in fact, in the first month of its operation, that was roughly 75% utilized. In fact, as we are talking today, that line is currently working at 90% utilization level. And the second capex that we did was for the alloy wheel plant in Mehsana, Gujarat, which should get commissioned sometime in Q2. So from both these facilities, we'll see an additional top line which gets added up. I guess both these factors together can contribute roughly 500 crore to the top line.